Ever since the end of the pandemic, the world has experienced a general increase in prices across goods and services. This is referred to as inflation. The famous economist Milton Friedman said that inflation is everywhere and anywhere, a monetary phenomenon. This means that the money supply needs to match the value of actual production and services. In a simplified model, the quantity theory of the money equation is MV equals PY, which assumes that an increase in M, the money supply, causes an increase in P, price. However, this assumes that V, velocity of circulation, is constant, and Y, national income, is constant. The impact of inflation recently has been disastrous and resulted in impacts such as reduced buying power, relative poverty, elevated expectations leading to wage tension, lending rate hikes by central banks, and instability in exchange rates, bonds, and equity market. The most serious damage that entrenched inflation can cause is to undermine confidence in the financial system and drive up future price expectations. This, in turn, can result in a wage price and asset price spiral, which is self-fulfilling and difficult to control. After the pandemic, there was massive monetary stimulus across the Western world. It's important to recognize that whatever policy the USA Federal Reserve adopts, it ripples through the entire globe. The accepted historical target for USA inflation has been set at 2% per year, whereas recent experience has touched almost 10%. Supply chain issues, surging demand, production costs, and swaths of relief funds have all played a role. However, what is normally downplayed is the level of quantitative easing, negative lending rates, and increase in money supply. The quantity theory of money immediately predicts significant upward pressure on prices to balance the equation. This has invariably affected the energy transition and is referred to as greenflation. Greenflation is a term used to describe inflation caused by increased capital investment to comply with climate objectives. Greenflation is very real and not transitory. This is a problem. Initial expectations for inflation were assumed to be transitory. Central bank monetary policies have contributed to excess demand and, hence, general inflation. The transition to a low-carbon economy is now exposed to greenflation, i.e., an increase in inflation in the medium term due to rising energy prices, among other things. Greenflation, together with the increased investment demand, is also being impacted by higher interest rates, which raise the cost of capital. So now, central banks all over the world have been trying to restrict money supply, reduce the velocity of circulation, and increase the cost of money through central lending rates. Fed Chief Jerome initially assumed the effects of inflation would be transitory, but Mohamed Erian, a high-profile private sector advisor, has maintained that inflation has been mischaracterized as transitory and should have been dealt with earlier on as a permanent structural problem. In future, will people be more inclined to hold gold and Bitcoin to protect their wealth? Well, Bitcoin and other cryptocurrencies still exhibit a significant level of volatility, so perhaps gold might be more attractive. However, a lot will depend on whether the central banks, especially the Fed, can stabilize expectations for inflation going forwards. Lower future expectations will result in lower actual inflation outcomes.
So what do you think? What's your opinion on this? Please let us know in the comment section below. Thank you for watching.